Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro Dollar, Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is a 4-hour chart of DXY, and right now DXY standing at 11164. After the FOMC yesterday, we saw a big jump on the chart of DXY and heavy fall on the chart of Euro USD because the Fed has decided to increase the interest rate by 75 basis points. So things are very bad for Euro USD and things are extremely going well for DXY, and DXY has US dollar currency index has crossed the previous high of 110 and right now standing at 111. If I take you to the weekly chart, then you can easily see that there is no resistance, and the next resistance on the chart of DXY is around 120, which is far away. My god, I don't know what will happen to the market if DXY reaches 120. Okay, so DXY is extremely bullish, so please take care of things accordingly. Do not think that there may be a sudden trend reversal, because my dear friends, never forget that for a trend reversal we need a fundamental factor, we need some fundamental reason that will change the direction of the market. Right now DXY is bullish. If it goes down or comes down also, okay, those will be just temporary correction, not a trend reversal, because right now we do not have any solid reason that will change the direction. Okay, so please take your trades accordingly. Now let's have a look at Euro USD, Euro dollar. Okay, and just the opposite. Okay, just the opposite on the chart of Euro USD, we do not have any support. On the chart of DXY, we do not have any resistance. Here we don't have any support right now. There is a free fall going on Euro USD. We can see since May, last year May, okay, there is a free fall on the chart of Euro USD. Euro USD started falling from 1.2260 level and the fall is still continuing. People are wondering that how far it will go. Okay, but nobody has the clear idea. Okay. So if you are a swing trader, if you are a positional trader, it's better to be on the sell side, because never forget that market has only one rule, and the rule is follow the trend. Right now the trend of the market is extremely bearish, very much towards the downside. So following the only rule of the market, you should be considering sell positions only. But if you're a day trader, intraday trader, or you're a trader whose trades last for, let's say, max to max 1 or 2 days, in that case you have got some few other options. Okay, so let's try to understand the levels one by one. Okay, let's jump in. Right now on the chart of Euro USD, I only see two trading opportunities. If I miss anything, please write down in the comment section. I would love to learn from you. Okay. So first of all, right now Euro USD is standing at 0.9820. This is the current market price. Okay. And following the trend of the market, okay, if Euro USD breaks 0.9800 level, or Euro USD breaks 0.9805 level, the selling may continue. Okay, if market breaks this level, then the selling may continue and we can go for a sell position again. But keep in mind, market has already witnessed heavy selling, so as a result, if you go for a sell position below this level, you must be very careful, and strict risk management is extremely important. Okay, and one more thing I would like to add here. Never forget that after a big volatile situation, okay, after a big volatile event like yesterday, usually market prefers to take risk the next day. Okay, so today there may not be a big move coming up again. So in case you take a sell position also below this level, do not go for a big position. Try to keep your position small, because if we follow the unspoken rules of the market, okay, the unwritten rules of the market, then yes, market will not be too volatile today. Market may remain silent because market prefers to take risk after a volatile day. So if market breaks this level with some heavy risk, we can go for a sell position. If you want to avoid trading for today and tomorrow, you can do it. You're most welcome. Okay. And on the other hand, if market tries to recover, from this current level here, then 0.9875, 0.9870 will be the first resistance. Why first resistance? You can see previously this level acted as support, so support will be acting as resistance. And on the other hand, we also have the Fibonacci 23.6% retracement level. So if we combine both the factors here, then there is a high chance that if market goes up also, market will be facing some serious selling pressure around this level. So if market goes up and reverses from this level, we can go for a sell position. Observe the market. If you see that market is struggling to cross 0.9870 level, market is forming a shooting star kind of a pattern, market is showing good price rejection from above, will give you the confirmation that yes, sellers are still dominating and you can go for a sell. The second selling opportunity will come around 0.9900. Okay, keep in mind, in this type of market, okay, sell on rise. Okay, in this type of market, sell on rise is the best trading strategy, because if you try to trade on a breakout, your SL is big, okay, high risk is there, but sell on rise is the best trading strategy. At least personally, this is my opinion. Okay, so my dear friends, whatever you do, please follow proper risk management. As I always say, do not gamble with your hard-earned money. Protect your hard-earned money. Be a trader, not a gambler. Bye bye, take care. And yeah, I would like to add one more thing. Okay, if you're confused, regarding the stop loss, if you're not sure what stop loss you should be using, in that case, you can simply use the indicator called as ATR, average true range. Usually ATR is used to find out the volatility of the market, but the second implication of ATR is also ATR is to find out the stop loss also. Okay, just look at the stop loss value. Okay, look at the, not stop loss value, ATR value, and you can also put the stop loss accordingly, because when we do not have any proper level on the chart to consider as a stop loss, in that case ATR comes for help.